Good morning, everybody. It is Monday, August 22nd. 2 weeks after I told you that the stock market was going to head back down, we are 520 points off on the Dow Jones, 75 points out on the S&P 500, and NASDAQ is down 2.5% almost. What is the narrative? Well, the narrative is this. The narrative is that inflation is forever. That's wrong. But it gets the reaction that the narrators want to get right now. So PIMCO and Capital Group are spouting that low inflation is gone for good. They are pointing to geopolitics and the lasting impact of COVID. Well, here's the chart that I gave you a couple of weeks ago, right? Geopolitics, right now they're inflationary. And the supply chains that are goofed up and the opportunity to manipulate oil, all brought to you by COVID, are still having an impact. But aging demographics is hugely deflationary. Global debt is hugely deflationary. Eventually, the clean energy transition will add enough capacity to be deflationary. And obviously, tech is deflationary. So, where are we in this whole big picture? Well, inflation is clearly a little bit stickier than I thought it would be. I think that has to do mostly with oil. And then we have supply chains that are still in transit. And we're about a year away from there being a lot more semiconductors. What we do know, as I've been telling you since February, that the third leg of inflation, which is housing costs, is starting to come down pretty dramatically. New apartments are at a 50-year high. As you can see, since the financial crisis, new home completions just keep going up. And I was driving around yesterday looking at different real estate projects that I could invest in. And it occurred to me that we are probably on a long sideways slide for real estate. Not only is the Fed raising interest rates right now, which is a short-term way to keep real estate down, but as the boomers move out of their upper middle class homes, at 600,000 to million range where I live, but million to 2 million in a lot of big cities, there's going to be a lot of those houses on the market. Already, I'm seeing our middle upper income homes, that's 600,000 to a million, getting 5 to 10% reductions in the asking price. I keep pretty close track of that. There is a house that I love that has been listed at $799 forever and didn't sell. I think it's been listed for about 5 months. Hasn't sold. They lowered it to $725 and now they're down to $690. I'm pretty sure it's going to sell at $690. It's pretty interesting to me that we're seeing a pretty significant move in real estate, and it's not causing any bank problems. Why? Because unlike 2008, the banks aren't leveraged to the hilt, and the borrowers aren't leveraged to the hilt. We really just have moderate leverage for homes, and there isn't any shadow bank money, any hot money that's causing a problem. So I think we're going to see a fairly orderly, long-term move in real estate where housing prices basically chop along sideways to only very slightly up for a long time. And remember, real estate prices typically are 1 or 2% ahead of inflation. So what does it say to you that there's no housing inflation right now, even though overall inflation is still bumping along? I would say that the housing is a leading indicator. With everything else we know, a year from now, we'll probably have a 3 handle on real estate. One of the points that PIMCO and the Capital Group are making is that geopolitics are inflationary. Well, I'm going to remind you of something. Someday, Vladimir Putin will be dead. And eventually, China has to play nice with the rest of the world because they cannot afford. Just look at their markets right now and look at the economic problems they have right now. China cannot afford to not play nice with the rest of the world. They have capacity that's being unused right now, and that's going to have to change. So while everybody else is predicting war over Taiwan, I will predict something else. I predict that the status quo plays out, that Taiwan essentially acts independently, has a pretty interesting strategic trade deal with China at some point. And while they won't be called independent by China, for all intents and purposes, they will be. And China will do everything they can to integrate them with the Chinese economy. And that is how they will assert influence, if not control. So where are we now in the markets? Well, as I showed you in the last couple of weeks, there's not a lot that's overbought or oversold. only a handful oversold or getting close to oversold. So there's only a few things that I'm super interested in that I'm mentioning in the article, but you could take a look at Comcast. I don't think I'm going to sell puts on Comcast. I'm just going to buy more shares. Caesars Entertainment is getting close. Square and Coinbase are approaching oversold. Netflix is turning the other way. Micron, Freeport-McMoRan, Ginkgo Bioworks is just cheap. Doesn't matter if they're oversold. Paramount Global, that Warren Buffett followed me into. AT&T is cheap. There's a lot of stocks that are getting close. Which ones do I want to focus on this week? Well, these are all repeats. Intel, Palantir, Warner Brothers, and then this VanEck Digital Transformation ETF. I've showed you the holdings here. On the screener that I just showed you, you had Marathon, Coinbase, and Block that were all approaching oversold. Like them all. I think that you're going to get your regulations sooner than later, probably next year. And the fact that BlackRock has basically adopted Coinbase, I think is pretty telling. So BlackRock handled a lot of the transactions for the Federal Reserve back during COVID and during the financial crisis. So if BlackRock is saying Coinbase is okay with us, work with our institutional investors, I'm sure they had a conversation with the Federal Reserve about that. So the regulations are coming. Bitcoin is a store of value. Ethereum is the future of digital contracts. And the altcoins are probably all still mostly going to zero, but a few of them will get absorbed into Ethereum and a few of them will probably make it on their own. So where's the margin of safety? In crypto, it's Bitcoin and Ethereum, and that's all you pretty much need. Now, if you guess right on an altcoin that goes to the moon, good for you. That's all it is at this point, is guessing, because virtually all the money in crypto development goes to Bitcoin and Ethereum. It's over 90%. So it's a duopoly in crypto, and they handle completely different segments of the market. A couple of months ago, when I told folks over and over again that I was buying Bitcoin and Ethereum beyond my dollar cost average, well, now Bitcoin is up off of its bottom by 25%, and Ethereum is almost doubled. These companies are going to make a lot of money being miners and facilitators of the transactions as the wealthy adopt Bitcoin as a store of value and the entire economy adopts digital contracts. You are extremely early in this game. Let's take a look at the chart. Falling off a cliff, down 70%, actually even more than that, about 80%. I strongly recommend that you own DApp, unless you're going to buy a basket of the stocks individually. I'm very happy with this basket. It's about a dozen stocks, take up most of the fund. I think that's an easy way to do this, is just invest in the giant trend with a basket of the leading companies. Don't try to be too smart. It's a good ETF with these holdings here. Top 10 holdings, 70% of the fund. And they do different things. Pretty well diversified across that sector. I think you should take a starting position. I think that this is the bottom in here. I don't know if it gets back there or not, but I would definitely have a starting position and be selling puts. My intention is for this to be 8% of my portfolio in coming months. So I have a starting position. I have sold the $6 and $7 puts. I discussed those in here, or maybe I don't. Oh, here it is. Way at the bottom, the December $7 puts. And with the DApp trading at about 6.25, you're basically saying that you're willing to accept this at 7 with a dollar premium. So a net cost under 6. Any net cost under 6, I think, is a bargain. That's why I'm buying it now and still selling puts in accounts where it needs to happen. Intel has come down for us again. You can probably get these puts for a better price than $250. But again, I want you to own the stock. You're just trying to get a lower price using the premium so that you don't have to be so perfect. I think it's smart to have a starter position or a half position in Intel and then sell these puts for as much as you can get for them. And again, yes, that means it hopefully gets put to you. You're trying to get this put to you at $32.50 net cost or lower. Intel's right at my bottom fishing. Could go down to about 30, pretty easy, right in here. See all this support. There's not much downside left in Intel. I've seen this happen in my career a number of times with this company and similar companies. These guys are going to make so much money on EVs and by making chips for other companies. And I just bought a laptop last night, so I did a lot of studying about all the chips. Intel pretty much caught up AMD on everything that they were behind on for a minute. So they're the big boy on the block. They pay a dividend. I think if you are a dividend investor, I don't know that you can do much better than Intel, to be honest with you. I mean, around 3% dividend, and you just have so much upside. It's going to break these highs at some point. So you're buying in the 30s. I think you're assured to get into the 60s over time. I think Intel is going to be as big as Taiwan Semiconductor eventually. Palantir, again, it's round tripped. They make a lot of money. The thing to remember about Palantir is they stopped investing in other companies. They're just holding on to the ones that they got. That means that they're starting to free up cash flow. A lot like Amazon, Palantir has the ability to increase their earnings with some very minor tweaks. Just stop investing into the company as much as they were. And given that most of their technology is cutting edge already and has been built over the last decade, they don't have as much capex in the next cycle as other companies. So as their contracts just keep pouring in recurring revenue, they add contract on top of contract, subscription revenue. Capex stays about the same, revenue goes up. That's a great equation. You need to own Palantir because the wild card here is, and we've talked about this before, if any of the companies they're invested in do well, Black Sky, any of them, it's all kinds of extra money to the bottom line. So I like you to have a position in Palantir and sell some cash secured puts. Then Warner Discovery, a lot of fancy investors have followed me into this one. Paramount, same thing. I could put Paramount on here too for sure. Sell puts. I mean, this is so cheap, it's kind of mind boggling. There's no way that Warner Brothers should be this cheap. No way. They have billions of recurring revenue. Last night, HBO Max went down because so many people were watching it. House of Dragon. So you should expect Warner Brothers Discovery to navigate through this and then turn up. Now, how long before it gets up to 80 again? Probably a while. But up to this range, this 40-ish area, I see that as being pretty easy. And if we add a different type of extension, not hard to see this stock at 100 in my opinion. And that's based on both technicals and fundamentals. More so fundamentals, really. Their cash flow divided by their capex, if they keep capex flat, it's going to be pretty tremendous because the discovery revenue can make this deal accretive by next year. So these are all just beating the heck. And I think this is much like I think Ford is going to be a leader in EVs. I think that Warner Brothers Discovery is going to be the leader in streaming. But remember, they also have news because they have CNN. The only thing they don't have at this point is sports. And I almost wonder, US sports, they have European sports. I almost wonder, are the other networks overpaying for baseball and basketball and football? Because, man, those contracts are rich. Why are basketball players making $30 million, $40 million a year? Why are baseball players making $30, $40 million a year? Football players aren't far behind, and those are huge rosters. I think there's a pretty big correction coming in U.S. sports. The demographics don't support the spending going forward. And I would think of it a little bit like Harley Davidson. Harley Davidson basically has a huge cult following, but it's getting smaller now as younger generations do other things, and the older generations that push those prices up slowly stop riding, spending money on their Harley Davidson apparel and their bikes. So if you take a look at what's happened to Harley Davidson in the last 10 years, I think that's a harbinger of what might happen to professional sports in the United States. Less money being spent on it. You know, I make pretty good money, and I basically gave up my NBA tickets because it got obnoxious. I was paying over $100 a ticket every game. Now, can they find 17,000 people in a city of, 2 million greater area to pay that? Maybe, but I don't know. I think Warner Brothers might be lucky that they don't have sports that they're overpaying on. We'll see. So I just wanted to finish with this because I thought it was kind of funny. AMC is down like 30% today because Regal Entertainment or Regal Theaters said they might go bankrupt. AMC issued every last common share that they could, that they were authorized to. So to get around not having shares to sell, they created something they called an APE unit, AMC Preferred Equity. It's a preferred share, and they're authorized to sell 1 billion of them. This APE, I think it might replace AMC when they go bankrupt. That's one of the other things I would mention to you. I've looked at theaters to buy just because they're usually in pretty good locations and the buildings are flexible. The theaters are still in bad shape, folks. You got a few here and there that are doing really well. But I go to a theater in a suburb of Milwaukee. It doesn't have the upgraded chairs, which I like because if I sit in those recliners, I fall asleep during the movie. And it's empty. We went and watched Top Gun 13 people in the theater. 13 seats around 80. So I don't know. I think these meme folks are cruising for a bruising. Remember we talked about margin last week and all the call options and all the puts that were going away. Last week's video was titled something along the lines of margin and options could cause volatility. Well, Friday was the expiration. Today we're getting volatility in a big correction. So take advantage of what's going on today to buy some of these things that are super cheap or at least sell puts or both. All right. Any questions about anything? Somebody asked about AST Space Mobile. What are the guidelines on asset allocation? Look, I've only got a few percent, right? A standard full position is 3 to 4%. And I have a hard time going past that just in case the technology doesn't work. If the technology does work, you can add on the way up. You can buy the dips all the way up because it's probably going to way over 100. If the technology doesn't work, it's going down to pennies. So you have to consider what your risk tolerance is. If you're willing to put 6% of your money into that stock, like some of you have talked about, just understand that that's a big risk. You might get rich. You might. It might be life-changing money. But from an asset allocation standpoint, I don't know that you should have more than a single position. I don't know that you have to sell it, but if you already did it, but just consider what would change if that for you if that stock went to zero, right? Somebody's asking about retraces. At this point, you just need to hold your nose and freaking buy. And I've been telling you about this stock for a year. Stop trying to outsmart things. If you don't have a starter position, get it. If it goes down, buy more or sell a put. It's pretty much that easy. The idea that you can be perfect is nonsensical. If this goes up to 100, are you really going to squawk because you bought some at 12 and some at 8? Who cares? If you get an average price in this range and it works, you're going to be really happy. Yeah, I still think that we're going to retest the June lows. The question is do we break through? To me, the fact that it retraced that much to the upside, historically, that means that it won't set new lows. It'll just get close. But I think the circumstances are so different today than they have been in 40 years. I don't know how much I believe that. And that's why I'm still 20 to 30% cash. I want an easier trade, right? I want an easier trade. But I am getting chances to pick companies, so that's good. Will I be able to just buy QQQ or some of the other ETFs? Well, the corrections have been cyclical and sector to sector rotation. So it's just going to be a little bit at a time probably. Unless something really bad happens overseas. Europe's in trouble. China's in trouble. That could spill over to us. There's no doubt about it. But a lot of that money comes here when the rest of the world is in stress. The problem they have is that the dollar is so strong. So I think you just cherry pick where you can cherry pick, like we talked about. But I would have a hard time not seeing the S&P in the 370s again, SPY in the 370s again. And then whether it goes lower, well, we'll just have to figure it out at the time. Yeah, somebody brings up ASTS. So the article I'm writing on ASTS, which I really want to get published this week, but life has gotten in the way. Rakuten, AMT, some other American Tower, AMT, have been investing in this company, right? So the institutional investors here, which are industry players at this point, are pretty big deals. American Tower, I've been reading a lot about them, and they just had the what was it, CoreLogic they just bought, the data centers. AMT is, I think, one more acquisition away from being a really interesting tech story, not just a real estate story. I mean, tech real estate. But if they add the edge computing, right, if they add an actual tech component, I think that's why AMT trades at such a ridiculous price to earnings ratio. I mean, by price to earnings ratio, even forward looking, right, the forward peg, AMT is expensive. Not really expensive, but expensive. It makes it hard for me to buy. But if they're investing in AST Space Mobile, that's pretty interesting to me. I wish I could figure out what kind of technology company they might buy. There's got to be $1 billion or $2 billion technology company out there with great technology that they could apply to the data centers and all the edge computing needs that are coming. We'll see. But I think AST Space Mobile, again, if this technology works in a launch window just opened for like September 9th to the 26th, they're going to launch, I'm presuming there's no problems. And by October, we should know how the tests are going. And if the tests are working and they just say, yeah, we have some tuning to do, but it's going to work, this one's going to get FOMO pretty quick. It is a Reddit favorite. And they need to put their money somewhere, seeing as AMC and some of the other stocks they like, Bed Bath and Beyond, are actually crashing and burning. So if they can get one that actually will go to the moon, I think they'll pile in. All right, let's call it a day. I have some driving around to do, and I've got a big stocks of the week dump coming. All right, take care.